Ladies and gentlemen, good afternoon and welcome to this important keynote address. My name is David Hewitt. I'm an oil and gas analyst with Credit Suisse based here in Asia. It's my pleasure to introduce the Right Honourable Sir John Major, former Prime Minister of the United Kingdom and a senior advisor to Credit Suisse. Sir John enjoyed a long and successful political career which included winning the general election of 1992 with the highest number of votes ever obtained of any political party in the UK. Sir John has a number of business and charitable appointments. Most recently, Her Majesty the Queen asked him to chair the Queen Elizabeth Diamond Jubilee Trust, creating a lasting legacy for her 60-year reign. Its principal focus is to eradicate curable blindness across the Commonwealth. Sir John will introduce our keynote speaker, His Excellency Ali Al-Naimi, and I'll moderate a brief question and answer session after His Excellency has concluded his remarks. Ladies and gentlemen, join me in welcoming Sir John Major.
Well, David, thank you very much, and welcome everybody to the luncheon. We have a very special session this lunchtime, and I'm delighted to be introducing one of the most influential figures in the Middle East and in the global energy markets, His Excellency Ali Ibrahim Al-Naimi, Minister of Petroleum and Mineral Resources of the Kingdom of Saudi Arabia. His Excellency, as I think many of you will know, is a leading authority on oil pricing, market stability, energy security, and a primary architect of OPEC strategy. For many decades, most of my lifetime certainly, the Kingdom of Saudi Arabia has been the leading oil supplier to the world and a single dominant voice in OPEC. Her views and her policy have been crucial to large and small economies in many parts of the world, and certainly including Asia. On many occasions, the Kingdom's commitment to keeping the oil market supplied during periods of price volatility has played a crucial role in stabilizing frenetic markets. And to be frank, there is no other oil supplier in the world with sufficient capacity to have done that so frequently and so well. So it's self-evident, therefore, that the thinking of the Saudi oil minister and the policy of the kingdom is vital to all of us. Last year, our guest was reported, I'm always careful to say was reported as saying, that he favored an oil price of around $100 a barrel. Be interesting to hear how he may view the future today. And then, of course, there are many questions upon which our guest may conceivably touch. Domestically, how will the Kingdom of Saudi Arabia address the rapid increase in her own domestic consumption? And how does Saudi Arabia view the potential impact if Iran were unwise enough to force closure of the Straits of Hormuz? Now, those are just a couple of the very many challenges and opportunities that directly face our guest at this luncheon today. And so we're therefore privileged to have His Excellency with us to share his insights and his expectations. At the conclusion of his speech, David Hewitt will return to moderate a brief question and answer session. But now, on behalf of all of us, I'm delighted to welcome to the stage our guest, His Excellency Ali Ibrahim Al-Naimi.
Well, thank you, Sir John, for your kind introduction. Excellencies, distinguished guests, ladies and gentlemen, good afternoon. It is indeed a pleasure to be here today, and I would like to thank Credit Suisse Asia Pacific for inviting me to speak. I first came to Kowloon in 1981. We stayed at the Peninsula Hotel, and during breakfast one morning, in walked the great American boxer, Muhammad Ali. He gave my daughter a signed photo, and I told him that my 3-year-old son was also called Muhammad Ali. So he picked him up and gave him a kiss. Well, ladies and gentlemen, when it comes to packing a punch, Hong Kong is tough to beat. I have witnessed firsthand the tremendous development, investment, and innovation that have occurred here and across the region over the previous decades. It shows no signs of abating. That's good news for the people of the region. This is good news for the global economy. Saudi Arabia's relationship with other Asian nations have strengthened and deepened over the period. Since 1997, total oil volumes exported from Saudi Arabia to the region have increased by 50%. Since 1999, Saudi Arabia's oil export to China alone have gone from 0 to more than 1 million barrels per day today. We have entered into joint ventures in South Korea, Japan, the Philippines, and China. And companies from across Asia have invested in Saudi Arabia. It has been a remarkable period of prosperity, an unparalleled period of partnership, and as we look ahead to the next 10 years, I saw no reason to change. Ladies and gentlemen, oil is now an important financial asset class, and vast volumes are trading daily. The oil price is increasingly subject to influences beyond traditional concerns about supply and demand. But misunderstandings remain. So today, I will tackle 3 key myths, as they are vital to the stability of the global energy market and to the wider international economy. First, Saudi Arabia's spare capacity. I occasionally see influential reports from respected financial institutions which question Saudi Arabia's spare capacity, question to what extent it exists or to what degree it can be maintained. It reminds me of the peak oil theories. Claims that the world is running out of oil have been around since oil was first pumped out of the ground. Yet over this period, despite billions of barrels of oil consumed, reserves have continued to rise. Human innovation and technological advances make this possible, and I see no reason this will not continue. Saudi Arabia's upstream engineers and scientists talk about oil and gas production well into the next century. In fact, a more pertinent question is the extent to which new technology, methods, and reserves will impact the global energy market. Fracking in the US, offshore drilling in Brazil, increasing progress in the Arctic, these new reserves mean the harbingers of doom have been replaced by the prophets of plenty. I believe, by the way, that new commercial reserves, such as shale oil, are good news for the global economy, which relies on an increasing variety of energy sources to help power growth. I also hope this increased global capacity will ensure even greater stability for markets and prices. So it's not a question of whether Saudi Arabia has the spare capacity, but whether we need to spend billions maintaining it at all. The answer is, of course, that we maintain a spare capacity to ensure oil market stability and to see that growing global economies are well supplied. We know it plays a pivotal role in protecting the world's economic health, and it is a responsibility we have faithfully and reliably discharged over several decades. Ladies and gentlemen, the second myth concerns Saudi Arabia's so-called break-even point for the price of oil. But most of the talk fundamentally misunderstands or misrepresents exactly what this means. In essence, this price point is as much to do with the global economy than any national government. If the price crashes to $40 per barrel, God forbid, it has a major impact on us, of course, but it also hits the global economy. It would undermine investment in unconventional sources, and it would have a negative impact on investment in renewable energy technologies. Our central interest lays in global economic growth increasing regardless of the price. To think we sit around dreaming up ways to keep the price at a certain level to fund domestic projects is rather fanciful. Our current level of infrastructure spending will not rise exponentially. The reality is that our economic growth and the economic growth of the wider Middle East depends on the health of the global economy. Ladies and gentlemen, the third myth relates to energy demand within Saudi Arabia and the extent to which this may impact our exports. It will not. Increased energy usage is to be expected in a growing economy. Asian nations understand this well. We are investing in infrastructure. We are diversifying our economy from merely selling oil, and we are creating sustainable employment opportunities. Of course, all this requires energy, but we are increasingly tackling demand by diversifying to other energy sources, such as gas and renewables, plus we are adopting a range of efficiency measures. Current levels of oil consumption growth are temporary. Our position as long-term, reliable suppliers of oil to Asia and the world, I can assure you, is not in doubt. Ladies and gentlemen, I have dealt with three myths. I will now look at three areas where there may be certainty in the decade ahead. They say predicting the future is like driving down a road at night with the lights off, looking out of the rear window. So I will not make predictions, merely comment on some of the shifts taking place in the global economy. Clearly, Asia's steady economic rise is not in doubt. When the financial crash hit the US and Europe, many commentators predicted Asia would suffer badly. It did not. Indeed, without Asia, the world economy would be in a much more serious condition. If anything, the world now looks to Asia to support global economic growth. Advanced Western economies could learn lessons from Asia's economic prudence and financial management, particularly when it comes to debt accumulation. So I firmly expect, particularly with new leadership across the region, that Asia's economic growth and prosperity will continue for the years ahead. This transformation will, of course, require energy to drive it. Again, I repeat my commitment. Saudi Arabia will continue to be a long-term energy partner within Asia. My second point relates to oil prices. I'm continually asked about the future price of oil, and I will tell you what I tell them. If I knew the answer, I would be in Macau today. Over the past 15 years, it's clear that oil prices have fluctuated more than any time in history. My first speech in Asia as minister was in Singapore in 1996. Oil was just over $20 per barrel, and I told the audience that the price at the time seemed reasonable. 4 years later, I spoke at the Institute of Energy Economics in Japan, and the price was around $27 per barrel. I told the audience that at that time, the price also seemed reasonable. Today, it's up around $100. And guess what? Yes, it seems reasonable. Of course, Saudi Arabia does not set the price. The market sets the price. And that's what I tell many journalists that I meet. That said, I am sure current levels will not deter further economic growth in Asia. But while oil is increasingly seen as just another class of commodity, in many ways it stands alone, considering its importance to global economic development and growth. Often the problem with this new reality is that prices can rise or fall on a whim, on a single report or set of figures. So yes, guys and girls, need to be responsible when publishing reports, and the market needs a more mature approach when it comes to future projections. The bottom line is this: the prospects for the energy industry are stronger now than any time in recent history. Wildly fluctuated prices may be good for a few traders, but it's not good for long-term economic stability and growth. My final point on future certainties brings me back to where I started: Saudi Arabia's deepening partnership within Asia. I believe it will deepen even further in the decades ahead, because Saudi Arabia's partnership within the region goes far beyond petroleum. In 1998, for example, Saudi Arabia sent merely 10 students to study Chinese in China. Today, more than 1,200 Saudis are studying medical and technical courses in China alone. I believe we have over 140,000 worldwide. And our flagship, King Abdullah University of Science and Technology, located near Jeddah, is attended by a large number of students from across Asia. While in my day, many Saudis headed to the US and Europe to study, today there are many more heading east. This investment in people highlights the importance with which Saudi Arabia sees its ever closer ties in this region. It is about energy, yes, but it is ultimately about relationships and about people. And that fills me with confidence. Ladies and gentlemen, to conclude, I want to reiterate Saudi Arabia's commitment to Asia's economic growth. I believe we have shared interests and that we share aspirations to raise living standards for people across the region. Domestically, we are striving to build a brighter future for our people. But Saudi Arabia will not stint in its commitment to meeting the needs of its international customers. I believe we are partners in prosperity, and I hope this continues for many more decades to come. Thank you very much.
Your Excellency, excuse me, thank you for an excellent presentation. As an analyst that occasionally writes about crude oil, can I send our reports to you for verification next time? Okay, we've got a little bit of time for question and answer, and we want to use it as well as we can. So please, a show of hands of people that might like to ask a question. Gentlemen here to start.
Yes, I'm Ferdinand Fisheraki, Minister. Very nice to see you here. I wanted to ask you a question on gas. I know that you have substantial plans for development of gas resources in the kingdom, and you're also looking at the potential development of unconventional gas, including shale gas. If you might share your views with us, I would be grateful.
Well, that's a very important question. If you noticed, I alluded to using gas instead of burning liquid fuels. We have over 286 trillion cubic feet of conventional natural gas, which we are using today. We know we have substantial unconventional gas, such as tight gas. We also know that we have very high potential shale gases. All of these we are working on. This year alone, we are probably going to test something like 7 wells in looking for shale. We know where the areas are. We have rough estimates of over 600 trillion cubic feet of unconventional and shale gas. So the potential is very huge, and we plan to exploit it. In addition, we are looking at solar energy and wind. We think we are very highly placed for exploiting solar energy. We have the acreage, and we have the high concentration of sun, and we have sun every day.
Just like Hong Kong. Okay, I think we had a question over here.
Thank you. I would like to ask you about the social implications of a high oil price, because it is well known that in many Middle East oil-producing countries, when there is social unrest, governments just give gifts to the population through subsidies or through public employment. But to finance this presence, let's say, these countries then have to push up the price of crude oil so that they can finance this package. But in return, because many of these countries also subsidize the consumption of basic goods, it somehow creates a vicious circle, because the more the price of these basic goods rise, right, the more also you have to raise the price of oil to finance the subsidies, and then because you have to either import these goods, or either because the energy input in the production cost of these goods is high, somehow it's a never-ending circle. So my question is, how do you assess the possibility of striking a new deal between oil-producing countries so that, on the one hand, you would decrease the price, you would try at least to decrease the price of crude oil, but on the other also to decrease the subsidies to oil-related products, because now they are very high. Thank you.
Well, I think I'm going to repeat again. Producers are price takers. They are not price setters. The market sets the price. And you know the volume of physical barrels that are traded is less than 90 million barrels a day. The paper barrels that are traded every day are over 500 million to 800 million barrels a day. So you know who is actually impacting the price. Certainly not the producer.
Excellent. Can I see any further hands? Over here. Thank you.
Thank you. A question regarding Venezuela and the recent passing of the President Chavez. And are you concerned at all about volatility in that country with the new vice president coming in, who's supposed to be a little bit more leftist leaning? Thank you.
We are concerned about volatility from wherever it comes, regardless of which country it comes from, or whether it's created by projectors one way or the other.
Here we go.
You know, there's been a lot of speech globally about the U.S. renaissance in oil production due to shale. but there's also a lot of skepticism because of the very deep reinvestment requirements, to keep these fields from declining very rapidly. What is your outlook on a 5-year, maybe a 10-year view in terms of U.S. shale production? Right now we're on the peak of excitement, but does that continue?
Well, if you believe what you read about the potential reserves of both shale oil, tight oil, and shale gas, the potential is very huge. That's why I mentioned this price of $40, God forbid. If it were there, a lot of this production will die. And so the price will probably stay where it is today or thereabout. But this is a real development. And you are going to see more development of shale gas and more development of shale oil all over the world. If you hear what the Australians are talking about, what the Chinese are doing, what the Ukrainians are doing, what the Poles are doing, what Saudi Arabia is doing, everybody is looking for this source of energy. So the future for it is quite bright because the potential reserves are there. And by the way, technology is not static. One must have confidence in the ability of technology to really improve both production ability and also moderating price. I have complete faith in technology. It has been proven over and over. You saw how horizontal drilling facilitated increased production. You saw how then multilateral production there. So, and you are seeing now fracturing at a very high level of pressures. All of this will definitely make those reserves come forward and also at fairly acceptable cost.
Gentleman there on the left of the back.
Do you have the plan to settle the oil in currency other than US dollar, like euros or RMB?
I don't think I have heard that one.
If I'm correct, the question was, would you sell in other currencies? Am I right, sir?
Yeah, do a settlement.
Today, oil is sold and bought on the basis of dollars. There has been talk in the past, there is talk now, and there is probably going to be talk in the future about either selling in euros or in composite prices. It doesn't really make any difference. And eventually you have to settle on the basis of dollars because that's how it is traded. So you can buy with any currency, but you have then to settle with the dollar basis. But there is no intent today. This subject has been debated over and over in OPEC, and there has never been an agreement. There are 2 or 3 members of our organization that want a mix of currencies. I don't think that's going to fly.
If I could ask the final question. You said to us that you were comfortable at 20, you were comfortable at 100. If we were here again in 3 months, what number would you start to get uncomfortable at?
Let's go Macau.
That was my final question. Are you going tonight? Ladies and gentlemen, please, this has been an excellent session. Do thank warmly His Excellency Ali Al-Naimi.